I was speaking to Lumkile Monde a short while ago of the IDC, and he said that I should ask you, very tongue-in-cheek, are you waiting for South Africa to raise first, where we've just seen the Namibian Central Bank keeping rates steady at 6%?
Certainly, South Africa's interest rate position is something that we watch closely, because being in a common monetary area means that our interest rate has to be synchronized. So definitely, yes, not that we are waiting for South Africa to start first, but where South Africa is a very important factor in our decision.
Of course, let's take a look at some of the other factors that do come into play, and chief amongst them has got to be inflation. We saw the most recent inflation reading showing headline inflation increasing to 5.2% in May.
That's correct. Inflation has been on an upward trend over the past few months. As you correctly said, during the month of May, inflation rose from 4.8% in April to 5.2%, and the pressure is coming from food and non-alcoholic beverages. And of course, this is a global problem. There has been pressure on food prices globally, and that has translated into the domestic basket here.
So it's not enough to warrant a rate hike just yet. How soon do you see Namibia having to venture down that path of beginning its tightening cycle?
Yes, that's a difficult question. It depends on a number of factors. As you correctly said, where South Africa is in terms of their interest rate cycle is an important factor, because our interest rate should not diverge significantly from that of South Africa. That's one. Because our monetary policy framework is actually geared to make sure that we support our currency pack, and one way of doing that is to make sure that our interest rate is aligned to that of South Africa. Second thing, we need to watch inflation going forward. We still think inflation is within a reasonable level, and therefore we don't think we need to tighten right now. But if inflation start to rise to significant levels, we will have to revise our decision.
What would be significant levels? Are we looking at, in your case, a target band of 3 to 6% as well?
Well, that's a psychological target for us. We don't have a firm target as it is in the case of South Africa. But yes, we think that inflation, if it is within that range, that's still within a reasonable range. Beyond that, we'll start to get worried.
Of course, beyond just tightening as a tool to cool the economy that some argue is ineffective in any case, what are the other options you're exploring to keep inflation down and growth on the rise?
Part of our decision today was to look at what is happening in economic activities, and we are seeing both at the global level and in the domestic economy that growth or the recovery that we thought we are seeing consolidating at the beginning of the year still remains fragile. And as a result, part of the decision to actually keep interest rate at the same level is to give the economy still a breathing space. So yes, growth is a very important variable in our interest rate decision. What
is your growth target for 2011?
Well, unfortunately, the situation in the global picture is very fluid and very volatile. At the beginning of the year, we were hoping that for 2011, the Namibian economy is going to grow by 4.1%. We are busy revising our forecast. In the next few weeks, we will have to release a new set of forecasts. It may remain the same, but at the moment, from where I sit, I think there's a likelihood that we revise our forecast downwards. But we're still putting the whole puzzle together.
Where a revision is possibly happening in that regard, Governor, looking at that relationship and your coupling with South Africa, does it still work, or are we looking at a possible revision of that relationship as well?
Certainly, integration within the common monetary area is something that we want to see deepening, and therefore I think we are already in a position to move a step ahead So, in other words, if I have to answer your questions, definitely we will remain linked to the South African rand. And no, we don't see anything at the moment that will make us change our minds. Because what you need to keep in mind is that we are linked to the rand because we think that that's a source of stability, and that's still the case. We still see South Africa as a source of stability. And secondly, that is dictated by economic conditions. As long as we remain a small open country and the structure of the economy has not changed significantly, that arrangement is still going to continue serving us well, and therefore there is no need to change. In fact, as I said at the beginning, we actually want to see more deepened integration in the common monetary area, and that could serve as a springboard for the SADC monetary integration.